The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians, my hour, and my pleasure to be here Monday through Friday on market days, and 3 great hours. You had John Logan right there kicking us off at 8 o'clock. Steve Rhodes comes in 2 hours, just terrific shows. I'm going to do my best here for an hour. Then, of course, you got Larry Pizzavento. You got programming right through the day. And this is going to be a really fascinating session. Why? Because we got that, well, first of all, in my own work for my subscribers to my opening call, I had mentioned that yesterday, intraday, I got a signal that I call in the Chapman wave methodology. I call it the Chapman wave Trin gauge. The Trin, that's the short-term trading index developed by Richard Arms. And as always, I've used indicators in my own methodology. The way the way that the indicator jumps out at me at a certain point and says, hey, look at me, this is the way I should be used. Not the way it was intended. For some reason, I have no idea why, but that's just the way I seem to see things. And Richard Arms, a wonderful technician, developer of many, many market tools. He's got the volume, breadth of the candlesticks, just a whole bunch of things. However, I just use particular parameters on the Trin gauge, Richard Arms Trin gauge. So I really can't call it my own index. It's my own methodology. Use of the index. And in that particular instance yesterday, and this got a success rate, I think it's maybe missed once, maybe twice in the last year. It has a way in the 90% area of accuracy. So in this particular instance, what it was saying yesterday at the close, intraday, but I mentioned this after the close yesterday, is that the indicator had given me a signal to say that within 1 to 2 days, the E-mini futures, that's the S&P E-mini futures, should give a kind of strength that is followed through in the cash indexes, and those cash indices would maybe take it up to the fullest extent, or maybe not, but it'd be handed over. The baton will be handed over to the cash, and then we have to see what happens. And later in the day, you might get a pullback, but the idea is that this particular index, within 1 to 2 days, has between a 7 and a 9 point move to the upside in the E-minis, which very often gets translated into the S&P cash index. The index itself is not even, I don't even believe it's based on the S&P, but it makes no difference to me. Okay, so it did that this morning. And, of course, there was the result yesterday, the election results. Much of it we kind of knew was going to happen. And this is really just a flourish of excitement that carries through. We then had the pullback intraday. But I'm hearing I got a whole bunch of requests here, and I'm going to get to them. I'm going to start off in a moment with Merck. That was my first, and then I'm going to go to a bunch of questions that I got. So now let me do this. In the Chapman wave methodology, the simplicity of this technique that I developed way, way, way back is just nice and clean and clear. And it says, identify the lowest, most obvious low bar. And from that low bar, you should be able to count at least 4 peaks to the upside if at either when B passes A, the leg B passes peak A, the technicals are very strong, the pattern's very strong. If that happens, you should go not only to 2 higher peaks, but to 3 and then 4 to at least the peak D. Okay, that's the simplicity of it. It goes in any time frame. Any tradable that you've got, and I even do that very often for fun in the summertime. We look at the same sort of thing for the chart that's shown on the temperatures. Now, what I'm looking at here is that this is leg C. We went 1 penny past 17,410. That was 2 days ago. That was the high, doji candle. Nice candle yesterday. Breakout to the upside today. Dow's up 64 at 17,448. The S&P is up 8 at 2019. The comp index is up 7 at 4631. Gold is down 22. I'll do it right now because I'm bound to forget. Just real quickly. Look, DZZ. This is the 200%. I know we've traded before. The DZZ 200% in leg C to the upside. Until it makes D, I'm not really prepared to say that there's going to be a very strong bounce in gold. And not only that, the dollar today has just made its own leg D to the upside in the dollar index. So as far as I'm concerned, we're getting close to some kind of a pullback in the dollar, getting close to some kind of a bounce in. I love this when you get this crash, and now in the shorter term you've got crash material in gold. Not yet the daily, but certainly the 120-minute chart looks like crash material. And what happens in a case like this is that you don't really get a bottom until there's a big announcement that gold is on its way to, and then they'll name some ridiculous number to the downside. That's about when you're going to get a decent turn. At the same time, I've got a feeling in terms of my analysis, because of weekly charts, leg D in the weekly chart of the dollar, I'm looking at this and I'm saying, on Friday, we will get an incredible amount of information that's going to allow me to at least start to gauge whether or not we've got a brand new buy mode in the Dow, in the weekly chart and the S&P, or whether this is just an extended right arm extension that is going to fail and we're going to come all the way back down in an Eiffel Tower, straight up, straight down, uppercase A pattern. You've got let's see, crude oil is up 2 points almost at 78.97. Bonds are down just 7/30 seconds at 141.01. And the euro, let me just do this quickly, EUR USD. Yep, euro is trying to form some kind of a pattern, but it's only C in the weekly chart to the downside. And boy, that monthly chart is sitting on an uptrend support level under the 200-period exponential moving average, and I don't yet see a sign of strength in the monthly chart. So the euro dollar currency pair, I'm going to be watching that real closely. Okay, now the questions actually follow the line of thinking that I want you to go through. First one is, I said I'd do Merck. Let me just do that. Let me get rid of this right now, right there. MRK. Why do I want to do Merck? Well, first of all, it was a request by one of my subscribers. And we often look at it, but we've also done this in the Master Trader series ages ago, and we got buy signals on it. He took it as a position and added to the positions, had a fantastic run. Merck has gone from the 61.62 high of 2007, I think that was October, December of 2007 at 61.62, plunges down to 20.05. That was the low in 2009. In March 20.05. Then it starts an A, B. Then it pulls back and it goes C, 48 round number high, pulls back in 2012, starts another move, and then it goes to a D. A D goes to October of 2012 at 48 round number high. Then it pulls back and starts another A, B, C, and I had a left side, right side price time match. I took it to this candle right here. This candle right here in May. And that says, let me just move that out. That says that by November of 2013, there should be a retest of the 61.62 high. Well, it came a little early. It came in September, and it came in at 61.33. I didn't break it, but it came as a test. Now you've pulled back, and it looks to me like Merck is just trying to complete this move to the upside. Then we've got to be real careful with the pharmaceuticals, I believe. Now, the weekly chart is going to be very interesting. Why? Because it has a pattern that says I could try to test the 61.33 level. If I start to break from 60.11 where I'm at right now, and I close any time in the next 2 weeks under 58.50, the 9-period exponential moving average, this move is done for now. and this now could be a pretty intermediate term pullback. So I'm watching the PPA, I think it is, PPH, the pharmaceutical. I haven't quite redone that as I was supposed to do. Let me see. Yeah, the PPH has made an all-time high. See, we're getting signals here that I have to respect as potential, because my daily charts are saying we're going higher. And then we've got to be careful. And it's leg C, so we could see if there's a close down tomorrow with no new high in the down the S&P, and then close on the upside to an all-time high on Friday. It says that next week we could be looking at some kind of a top, and that top I'm going to have to assess over the weekend. But in the meantime, the PPHs are looking very good. That's the Market Vectors Pharmaceutical ETF, and they're holding the 9-period moving average. But the zigzag up and down below the 9 EMA, below it, over it, it's like a sine wave move, tells me that we've got to be real careful in different sectors. And I suspect, even though we are along the biotech sector and done real nicely, we took some profits on a very short-term trade this morning. But I'm suspecting that we're going to get a rotation out of some of the very favorable sectors right now. And how this rotational correction unfolds in November is going to be absolutely imperative to telling us. And now I can get to the questions. Basil, Stock Traders Almanac / Hirsch, that's Fred Hirsch, I think, late Fred Hirsch, says 2015, number one, pre-presidential election years never down since 1939, that's the Dow. Number two, fifth year of a decade, that's 05, average plus 28%. Industrials last 130 years have always been very good. Will this cause your Chapman wave to restart on the monthly count? I thought it was close to a near end in the Dow. Well, first of all, I'm looking at 2015 as the most critical period in my time lapse, my cycle work, just in a whole slew of things. But most importantly, it also involves certain skyscraper potential. I had mentioned ages ago, it would not surprise me if Donald Trump would be involved in the discussions of America's next tallest, world's tallest building. That's just a guess. I've now may put myself on the line for two things, both the announcement of a mega skyscraper and Donald Trump. He doesn't have to be involved in it, but I'm just saying that was my thinking some time ago. And as far as the cycle work goes, remember, I wish I had that cartoon. It's in my it's not in my CD introducing the Chapman wave methodology, but I absolutely should have put it in. It always has this husband and wife, and husband's looking at the paper and he says, "Wow, 1 to 12 upside material in the market. What a day! My stock must have done fantastic." And he looks and says, "Up, down." That's my stock. His wife turns to him and says, "They've got to get the 12 to 1 statistic somewhere." So is this the when you get to the other side of that statistic? Basil Chapman, I'll be back. We've got a bunch of questions that I have to answer. I'll do that.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, so right here I've got little Groucho Marx, I guess, as I grabbed a couple of from I googled it, so I've got it. Those eyebrows. So what happened? You see the eyebrows? So what happened when we get rid of this? Boom. Close tabs. What's going to happen? Good. What I noticed some time ago, maybe 5 years ago, 6 years, who knows? Time flies. I was doing a Master Trader series, and we had a chart pattern that looked at. It had a beautiful V-shaped pattern, and I put this. Semicircle above the one because I wanted to show something. And I suddenly thought, oh my goodness, look at that. If I put another semicircle, an arch formation over here on the other one, it looks like a Groucho Marx eyebrows. So that's the only way, you use little nicknames or little cartoons or little images in your mind. It's just really easy to get these patterns right. And I always say that markets are made up only of V-shaped patterns, cup patterns, inverted Vs, inverted arch, or arch formations, or straight line moves. Those five, that's all you need to know. Five different degrees of angle, curves, and I think that really helps. So I thought of that pattern. So I always call it the Groucho Marx pattern. It's really a V-shaped pattern. Getting back, it's really a double top pattern. And what happens is you get to the double top, and at that point you're going to get a lot of information that's going to tell you if it's like the H pattern. Oh, I wish I had my CD. I should have got that out during the break instead of Groucho Marx eyebrows. What happens is the pattern that I'm looking at is really like an inverted H It's like what I call, it's the backwards Y, lowercase y. Look, there it is. All right? What, a Hebrew Y? That's what it is. There it is. So if you're looking at this, that's what I also call the drop bucket pattern. So there are a number of things that say, hey, if you're going to make a double top here, and Microsoft, I'm showing right now, has gone just above the high of 47.57 back in the week of the 19th of September, pulls back very sharply to 42.10, rallies back to today's high of 47.85, and the evidence is going to come out next week, at the end of this week on Friday, where we close on Microsoft, and where we close the following Friday. If it's sharply lower, you got to be careful. You might have made a double top. But you've got a pattern here in something like the IYT. Now I'm explaining. This is for the following up from Chris, who's been asking for 3 days about the Groucho Marx eyebrows. But sometimes the eyebrows occur. Now, for those of you who know the traditional head and shoulders pattern, if you know all the variations, you know that the most powerful one is the one head and shoulders at an angle, not where it's just horizontal, but where it's at a slightly declining right angle. That's the one that has the potential for a more potent down move. It almost resembles the wedge formation that I sometimes talk about. You remember I spoke with Ernie the other day. We're looking at on the monthly charts of the long-term monthly charts of the Dow, where he says if that's the case, if there is a wedge formation, a rising wedge formation, watch out. We could go all the way down to the bottom line, which takes us below 9,000. So that's something to keep in mind, but I just don't think that we're ready for it yet. However, here's almost the same pattern, a rising wedge formation in the IYT, the transportation index. You've got as well the V-shaped pattern, but here's the difference. You've gone higher, and you've already closed above the previous high. That to me is very important. 152 round number low. The week of the 19th of September, 156.28 was the high, peak E, and plop, and almost a long-legged doji, kaplop, you go all the way down to 130. I mean, this is big for the IYT. Go all the way down to 137.05. Then you rally back, but you rally back to all-time highs. I've got it as a leg F in the monthly chart. I've got it as an F/A in the weekly chart. But the technicals, I have one technical in the monthly chart that says, whoa, from now on, you are in play. And that's the on-balance volume, but I haven't got a signal from it yet. All the others are saying, everything looks fantastic. Oh, so does the OBV, but it's giving me a hint to say, heads up, yellow light. But this could have recycled with the Chapman Wave Instant Restart, which says that if this is leg B, we cannot get leg D until the very earliest, sometime like in February, right? So that's normally the second instant restart, the first buy mode after an instant restart has the potential to even go to another F. So people say, oh, wait, F is very negative. I mean, very, very negative, and B is very positive. How can you be long and short at the same time? Well, we don't have a position here. We don't need a position here. It's acting extremely well. I can hold it as an F for now until I get evidence to say, hey, maybe it's a B. I don't have to do anything with the monthly chart. Why? Because the weekly comes first, but the daily comes before that. I'll be back and explain.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, so following up, everyone, Dow's up 75, S&P's up 8. Following up on that V-shaped formation, look, here's a V-shaped formation right there. And that is IYT weekly. And it goes from peak E, this is the I shares of the Dow Transportation Average, ETF, 150 low, 156.28 high, week of the 19th of September, plunges down, goes all the way back, and then it closes above that 56.28 high. Last week it goes to a close of 156.70. All right, so that's a good sign. But look at the way the MACD is starting to climb now. It could deflect lower or it could go higher. We don't know. The MACD is related to the 9-period exponential moving average, has a little bit of a relationship to the 9 EMA itself here, and that's rising. It's way above the 9 EMA. That's a good thing. Stochastic hasn't yet gotten above 80%, but it's getting close. So this is where you can expect that there might be a failure. What happens, the question should be, is if you go higher, as you have this week. Well, a lot depends on the close. But if you use the methodology that I have for the lowercase h pattern, and the left side gets taken out decisively, you have one, maximum 2 bars to get back into the arch formation. Remember, you have to get above the left-hand low bar that you're benchmarking. And that could be very positive. Now what we've got is the exact opposite. So that if the IYT is going to do that, it goes into a different category. It isn't exactly a Groucho Marx eyebrow V-shaped pattern. It has that characteristic. We won't know until it really takes out 153, 152 support, closes under 152, which is the 152 to 35 is the weekly 9-period moving average. So I don't want to throw too much information here other than to say, in some cases, we have perfect instances of the V-shaped pattern for the double-top Groucho Marx drop bucket formation. And in others, we've gone a little higher, and it takes in the same concept, except it refers more to the pattern, the upside-down pattern of the lowercase h. So let's just keep it there. I've got a chunk of things that I still have to get through, and I'll do that, and I will take calls down for the next segment. We've asked some people to call back. So Bob asked a question about Stock Traders Almanac, and what I wanted to say is I believe very strongly in cycles that repeat, but I believe much more strongly in my own work, so that how else would you get a statistic of 1 to 2 or 1 to 3 or 1 to 5 if there wasn't that one? And you never know when that one is going to come. So I say, okay, my work says that the weekly is going to recycle, and that'll confirm Al Hirsch's the Stock Traders Almanac theory. And if I get a failure pattern, it confirms the theory that says there always has to be an opposing view to whatever it is that you're talking about. So Julie asks the question, is the QQQ today possible peak C and daily? Peak C, well, first of all, is leg B in the IYT before I move from this chart. So that says we should still go to, look, the stochastics at 93%. I'm not going to get a sell signal until I get a D. And then I have to still assess with the stochastic if it's still in the 90% area where it's going to pull back or go to an E or an F, which it can do. So let's go to the Qs now. The QQQ series, this is leg B. But you know what happened? Leg B at a high of 101.97. If anyone got my in my Traders Corner from my opening call, you would see what did I write? I said, if there is 1 penny move above 101.97, it starts leg C. It went to 102.03. This is leg C. There is still a D to come. And it doesn't mean just because it's C and you've only got one leg to go before it gets to a D, that's the end of the story. No, you remember, can recycle, a whole bunch of things can happen. The objective in the Chapman wave is to get you from as close to the bottom as possible to as close to the top at a D as possible. And when you get to the D, other things can happen. So that's what I'm looking at right now. If you look at the weekly chart, I don't know why it's moving away like that. Let me just quickly get to this. Space to the right, 7, here we go. Oh, I expanded it. So if you look at the weekly chart, there's that V-shaped formation, but it's decisively broken above it. So yes, everything else applies, that this could be a single leg up failure pattern, but it only fails if it really closes decisively under 98. 98.58 is the 9-period exponential moving average. A close underneath that will say, hey, that was just a right arm extension. We're going back down. Be careful. I don't have that information yet. All I can say is that's what I would tell you to be careful of. It's in leg F/B in the monthly chart. So I hope that answers your question. It's not a failure, and today would be a failure if we plunge from the high today down into the 99.30 to 98.70 area in the next few days with just relentlessly break down. That'll say, whoa, be careful, you've got a failure pattern. I don't see that, not yet. Okay, next question is, Julie asked, ES, dollar ES dropped from election ebullience. So after November 2012 election, after Obama was elected, big slide. What was your wave count then? Wow, November 2012, let me just answer the question. I said I'm going to answer the questions now. 2012, November. September started to move down, and that was peak C. It pulled back very sharply, and then it went to a D. That D was in May of 2013. So yes, there was a sharp move down, but it was only from peak C in the monthly chart. It held the 9-period exponential. Look at that beauty. I mean, the beauty of this 9-period exponential moving average. I can't even explain it to you. Look how, oh, it's just beautiful. So it holds it, it goes under it, then it closes above it, and then it doesn't close. It hasn't closed below it since. It hasn't closed below the 9-period moving average since September of 2011. Are we due for a close below? Yeah, we're due, but does the market know that? No, it doesn't know that. So at this point, we're above it. We're in the area that says from here, you've got to be a little bit careful, but that's all it's saying. It hasn't given any signals yet. That's the monthly chart. So that's the story there. Next question is, wait, what was your wave count? That's a wave count. If not, do I see SPX 2025, 2040, and 2050 as major Chinese war resistance sellers coming in near tops? Do you see the same? You know what? I'm going to just say that for now, I'm going to give you one level to look at in the SPX. I like to go step by step. I could give you a really great reason to say why the S&P is going to go to 2,500. But I don't like to do that. There's no reason to even discuss that. First, we've got to get through this weekly pattern to see, is there going to be that Groucho Marx eyebrows V-shaped pattern in the S&P? What does it mean? What is the wave count, etc.? So I'm not going to get into that other than to say I don't have any sell signals yet in my monthly charts, and I think we're going to go higher. How we go higher is the big question. Okay, hope I answered that. And just I said I'd give you a number, and the number is 2,000 and right there, 2,000 and about 43. That's where this line comes in, the inside track line, and that would be between this month, 2051 to 2000, somewhere between 2050 and 2065. That's the trend line, the inside track resistance. So if you ask me where could it go to me that would be a major area to watch out for. Paul, Paul, good question, Paul, about the trade that we had, trade number, the 13 bullet points today in my Trader's Corner, and that is trade number 4. I had I looked at it and I said, what? And then I forgot to go back and change it. I said raise the stop to, and then I put a number 77. It's not 77. It's really 74. But at this point, it doesn't even count. We're using yesterday's stop on that particular one, so don't worry about it. That it solve itself or resolve itself. And then there was one more question. No, there are 2 more questions. Let me see. Asks the rut. Can you look at the chart, monthly wave count? How long for monthly to break out before we say uptrend is over, like a peak F or something? So the question is on the rut. Let me go to the rut. The rut is the Russell 2000 index. Peak C, it needs to go daily. It needs to go above 1178.40. 1 penny above starts leg D. This is the rut trading at up 230 at $2.30 up at 1167.76. Now this is going to be very interesting. I had a peak F top I still have a peak F top in the monthly, and the technicals are very poor. But the candle from October, as we came screaming into the end of the month, says, hey, this is good action. So the others are going to have to follow, and we're going to have to watch them real closely. But in the meantime, back at the ranch, it's still making lower highs and lower lows. And until it can close above 1183.85, that's the number. For a close above that says, ha, now we can retest the all-time high of 1213.55. So I hope that answers that question. And yes, a breakdown in the rut would be the real tip-off to be very careful, because you cannot have the generals moving without the soldiers. So at this particular point, if in November the Russell 2000 closes, instead of closing above 1150, the 9-period moving average in the monthly is 1145.60, instead of closing above there, nicely above there, if it closes below at 1138, I'd have to say, this is real trouble. Watch out. now I have to start thinking that the other bigger indexes will start to fail. Let me do the IWM. Most people don't do the right, they do the IWM. Same thing. So let me give the numbers. A close above 115.30 would be very good in November. Much higher than that would be even better. But a close under 112, 113.81 is the 9-period moving average. A close under 112 says, wow, be careful. We're going to test the wick of last month's candle. So I think I got to most of the questions. I had my own questions, but you know what? I'm kidding. My eyes are starting to glaze over. I don't know how you people can even listen to these technical things. I have to look at charts. I have to do it. It's the only way I can be involved. Otherwise, eyes glaze over. At school, I was an eyes glaze overer. As a teacher came up with a new concept, I would say, wow, that's interesting. And then my mind would start working out variations of that concept. And, of course, every word that was spoken was lost to me. And so there you are. Yeah, so the IWM says a break above 117.37 could give you a measured move, and that measured move on the daily, just short term, could go to 117.72. What is the meaning of life? You know, I had the doorbell ring earlier, and I looked outside and I saw some very well-groomed people, and I thought, oh, yeah, we go every year. I get these guys. What can I say? And they came and they wanted to sell me on a particular religion, and I said, thank you very much. I took their pamphlet. I wasn't prepared to discuss anything, and they were just such nice people. They were so happy and they were so energized. It was nice. I thought, you know what? That's even more important than anything else. So, okay, now what I'm going to do, we've got a break coming up in another minute or so. I wanted to talk about, I wrote it down. Yes, I wanted to talk just for a moment about bonds. Look, I had said the TYX, which is the, let me get it here, dollar, TYX.X. The TYX has made a peak C. That is, the TYX is exactly called the 30-year Treasury bond interest rate fund, I think it's called. Interest rate. All right. Index, actually. Now what I'm looking at in this particular instance is the long wick of this candle from the week of the 17th of October, we went down to 2677. Remember the October 15th reversal day? That's going to be something we watch really closely. And the reason why I wanted to bring this up is that there is another candle, and it's a candle that was mentioned yesterday, which I wrote somewhere. I don't think I got time now to even find out where it was. Gosh, I wish I could remember it. And people were talking about it as if it was a very negative candle. And I'm saying to myself, hey, I've seen this kind of candle before, and there's a particular interpretation that goes with this candle. Now, I don't know why I even started this if I couldn't remember. I look at so many charts. I remember the chart distinctly, and now I can't remember what the candle was. Darn, it was a monthly candle. What's it, junk bonds? JNK? Was it junk bonds? No. Okay, well, we'll talk about this in terms of the bonds themselves. Why it's important? Because bonds have held very well. And my theory has been that at some point we will actually start to be able to measure the outflow. Oh, I remember what it was. Now, I won't be able to find the chart, but I'm going to tell you right now what I wanted to talk about. The outflow of bonds from PIMCO, which is just an 20 billion, I don't know what it was, it's huge. Where's that money going to go? After all, I don't think they're going to just transfer all those bonds from one account and take those same bonds and put them into another one. Somebody is going to get rid of those bonds and have to buy other bonds. I'll talk about that if I can for a moment, but I also going to take calls. We've got Travis waiting patiently for a long time from St. Louis, Minnesota. I'll be back.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
We're back. Dow's up 73, S&P's up 8. And just a real quick question from Sarah. Visa and Goldman Sachs, what are the wave counts? Daily is in C, and the weekly is in E, but it could be a brand new A. It's just amazing, this chart. And the Goldman Sachs is at B. It needs to go above 191.98 to start leg C. The weekly is in F/A. There's that V-shaped pattern. Boy, the Groucho Marx is going to be really important for the week of, for this weekend to next week. Let's go to Travis, waiting patiently. Hi, Travis. How are you?
Doing great. Good morning.
Good morning.
Real quick, I know we're running short on time here. I dumped half of my CLVS on Tuesday, which I guess was yesterday, after it confirmed that leg D in the daily. I know we talked about it last week,
yes,
and we were going to talk about it again.
Right, okay. And the weekly is still leg C.
It made a peak D in the daily, so I dumped half, and I'm going to stick with the other half until the trial information comes out here in a couple of weeks. I think it's around the 18th is when we're going to hear from the company on the drugs.
The 18th of November. So then I'm going to make a suggestion to you. Keep in mind that a test of the 56-ish area, 56 to 55, watch it closely because the MACD is still good, stochastic still good, weekly chart is still good. You might use that as a trading position going into the day before or something. But
That
fabulous. You've had a terrific move, and you've actually positioned yourself beautifully for this. You've got your profits, and you know exactly what your intentions are, how you handle the day of the announcement. Well, let's see if you've been able to add any positions. If you can build up a little kitty, we might decide, or you might decide, that because it's rallying into the news, biotechs very often, when they rally into the news, they don't come out with good news. When they fail going into the news, sometimes they come out with great news, and they overtake everything from the gap down. They just gap up, so let's see how you can deal with it. But you've had a fabulous move. That's Clovis Oncology. But that wasn't your question. Your question is?
No, Tesla. Let's look at Tesla real quick. They have earnings tonight, and I wish I would have shorted it right out the open this morning. I've been watching this, and it made a peak D in the daily, and I'm like, man, they got earnings tonight. Oil tanked.
The peak E in the daily, yes.
What do you have it in, peak E?
Yes.
Oh, okay.
And peak F in the weekly. And I suspect that I don't care about the news. I think that it's going to be a tough time for Tesla. And unless I'll be proved totally wrong if not only does it gap up today, but it holds the 245 to 250 area and it climbs after that, then I'll say they are amazing because everything about I don't know about their product. It's a beautiful product. I'm just telling you about the chart itself, the way the chart is acting. It should test 210 to 200 before it tests 255 to 260. Hey, tomorrow I'll be apologizing to somebody maybe, but that's the way the chart looks.
I agree, and it makes fundamentally sense, and I'm not a big fundamentalist on these types of companies, but I mean, I look at the chart and I think about the oil price just collapsing here the last couple of months. And, I mean, how is that good for a battery-powered car company?
Correct. Have you read about Prius? The Prius is having, I think it's a 17% decline in sales. People, the auto companies they're beholden to fickleness. They have no choice. I've watched them for as long as I've been alive, how they've followed the public, and then they've made up their own minds instead of following the public or following what they should, which have been oil prices. If they had watched their oil charts, they would have said, whoa, let's start making bigger engines, folks, bigger and better engines. But they didn't. They did the exact opposite. And they always get left holding the bag. And in this case, it's the bag of the little underpowered cars that give you great mileage. Now, do you want to get good mileage? Yeah, I think that's part of trying to look at life economically. But at the same time, this is going to be very interesting. We'll see what happens with Tesla. You and I could be proved wrong tomorrow, but you've made the money and you're out, so don't worry about it. Let's see what happens. A short right at the opening would have been great.
I know. I can't believe I didn't do it, but I didn't. So
we'll watch it closely. Thanks for calling, Travis. Stay tuned, folks. We've got Larry Pesavento coming up for you. A wonderful show with Larry as usual. Check out the opening call. Very interesting time to get it. I'll be back tomorrow.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.